I think especially in the U.S. market, which is the distinct bubble market in terms of stocks. If you look at the European market, although they've got all the headline news about the energy crisis there and so forth, actually their markets did not go up like ours. Nor did the Chinese, nor did the Shanghai. Shanghai over the last few years has gone up, but it's certainly not a bubble, and it's breaking down as well. It's coincident with the U.S., so is Europe. But we think the percent decline is highly likely to be more in the U.S. than it is in those markets, because they're not breaking from a bubble top. There may be bull market peaks that are breaking down and will suffer bear markets. That's highly likely. But on a percentage basis, we're the ones that have created the greatest sin. And it was monetarily based. And when it comes unwound, it will be painful. And for asset managers, their shock this year is that the alternatives that usually are there for them in the portfolio mix aren't there now. The bonds are not a safe place to be, even government bonds. Muni bonds are not a safe place to be. If you look at a price chart, for example, of the S&P compared to, let's say, where it was in 2008, 9 at the lows, or even the highs in 2000 and in 2007 at 1,500 plus on the S&P, we're still well above those levels. If you look at T-bonds, look at muni bonds, look at high yield corporate debt charts, we're challenging the 2009 lows. I mean, so those markets have effectively crashed. And therefore, where do you go? And I think some of the evidence of where asset managers are going isn't that gold is going up, though I think that's going to occur. I think it's going to resume its ongoing bull trend. It's that it's not going down like they are. How come? How come the Bloomberg Commodity Index is still nicely up on the year? Okay, they're fighting inflation, right? Okay, 10 months of this and they're killing the stock market and the bond markets, but they're not killing commodities. They're having a correction, still nicely up on the year. It goes down, this coming week, probably single digits on the year. So on a comparative basis, these assets that they're supposedly breaking aren't breaking. And I think the reason is that we're coming to a monetary crisis and a government bond crisis. We're seeing the beginnings of it. And there's only one alternative for central banks at that point. They have to defend. And I think gold knows that that's around the corner.